Hello, hello. Welcome everybody. I will just wait another couple of minutes, well, maybe 30 seconds or so whilst people come in. But for those already here, by all means, say hello in the chat box. It'd be lovely to see you guys interact. I know sometimes in things like this, people want to just sit and watch, but the more you chat, let me know what you want to cover, let me know what questions you have, let me know what makes sense, what doesn't. If I'm boring, if I'm going too fast, it just makes me do it better for you so that you get a better experience from it. So please say hello. And again, let me know what you want to make sure is covered, what currency pairs you want to look at, stuff like that, so that I can make sure you get the best from it. Now, just before we start, my name is Becky. Hopefully that's obvious there from the screen. I know you've got to turn your head a little bit, but my name is there and my email address. So becky@tradewithufos.com. That's my email address. So if you want to get a hold of me after the fact, for some reason there you go, then you can get hold of me on that, becky@tradewithufos.com. Now there's also this link here, tradewithufos.com/Becky. I'm just going to show you quickly what that is, because I want you guys to use this if you can. So if you go to that link, you can get yourself a free Trade with UFOs membership. And the benefit of that is a few things. You get emails every day on probabilities on 5 major world markets. You'll also get recordings of our YouTube sessions and reminders for our YouTube sessions. But for me, most important is that you can come down here and ask a question in a public space. Now, I'd rather you do that rather than email me, because I can then answer it in a public space. So it means other people can learn from the same thing. It may be that a question you have, somebody else has already asked, and you can find the answer down here. Or it may be that the question you have is new, in which case you're doing somebody else that favor later down the line. If you're really uncomfortable doing that, by all means, you can email me. But otherwise, I'd love questions to come in there so that we can help the community as a whole with the questions that you guys have. Okay. So let me know, guys, by the way, if you've been in our sessions before. I know this is being recorded as well, so those that may have been in the last session, these will make sense as we go through what happened last time. Before we do that, let's just make sure that we cover the disclaimers, because of course that is important to do. So there we go. So the disclaimers are being highlighted there on the top. Of course, important for a legal reason. Of course, we have to show them, but it's also important that you guys understand these kind of things are our demonstrations. It's us showing you how we use our technology, how we run our methodology. If you don't like it, you can ignore it entirely. If you do like it, you can do it, you can tweak it, you can do whatever you want. Ultimately, you are the individual trader. You will decide what to do and how to do it. This is us demonstrating how we do it. Now, just one more comment on this before we move on to the charts. This is what we're doing, swing shots. So I normally look at swing trading opportunities. That's not to say that day trading or longer term trading or investing in Forex can't be profitable. Of course it can. For me, I prefer swing trading Forex, as a lot of orders move through this market. And so timing it on very small time frames can be a little bit trickier. The probabilities are less in your favor. Again, not to say it can't work, it's just less in your favor. So for me, I'll be looking at swing trading, meaning that our trades will last couple of days to perhaps a couple of weeks. If we can't find opportunities on those time frames, then by all means we'll change them around so that we can place a trade and show you how it's done. So you guys let me know in the chat box, what style of trader are you? Do you day trade? Do you swing trade? Or do you long-term trade or invest? Let me know, and that will give me an idea of what to focus on a little bit more, or what time frames to look at a little bit more. Okay, so let's look very briefly whilst I wait for you guys to respond there. Let's look very briefly at the trades that we took last time. Hi, Kelly, just so you send your day trade. Okay, cool. We'll have a look and see if we have shorter term opportunities as well, depending on what we have, depending on what the markets give us. Thanks for letting me know that. So the first trade that I wanted to go over was one that we placed last time. This was on the pound Aussie, and this would have been a day trade, 4-hour chart for our bigger time frame, 21-minute chart for our entry time frame. So that trade would have lasted a few hours, most probably. Just seen there from Nick, swing long term. Okay, great. We'll try and look at both then so we cover it all. The great thing about, and you'll see from these examples that I show you, the great thing about using a methodology like this that's just based on chart data essentially and technology that you use is that it can be applied to any time frame, any market. So let's say we only have opportunities day trading today because of what's available. Nick, you can just take that and apply it to bigger timeframes. Exact same methodology. And vice versa. If we only have long-term opportunities available today that fit all the criteria we want it to fit, then Khalid, you can take it and do day trading with that. So right, let's have a look at what happened last time. So we had a trade on the pound Aussie. We put it on round about here. We got in relatively soon after that, which would have been here. Then as we see, these two green lines, these were our targets, and price of course went off and hit our targets. It then came back, went off and would have hit the targets again. So if the UFO was still there, you may have chosen to take it again and again. So depending on whether or not the UFO was still there, you could have taken that trade once, twice, 3 times and made the same profit each time. Now you may be thinking, well, hold on, this went off really far. You didn't catch any of that. We never know how far it's going to go. All we know is where we have the highest probabilities to take profit, and that's how we do it. So hopefully on the next one that I show you, or a new one that we put in place, that'll make sense as to how we get there, how we get to our targets. I'd rather have a target here and get it than have a target up here, for example, and just miss it. And then eventually, same thing, came back and hit it again, went off really fast. So again, depending on how many times you place that trade, if the UFO was still there, you might have got decent movements out of this. And then eventually it came back and broke. But it would have been a decent trade at least once, twice, 3 times, depending on whether the UFO was still there. Definitely hit our targets at least. So let's get rid of those drawing tools. So we've got a nice clean chart for the next one. And then we'll look at this new one that we put on as well last week, which lost. So that was an example, 2 trades, 1 wins, one loses. This is the nature of the markets. Of course we have losing trades, but it's okay. If we win 1 and we make 2, for example, and then we lose 1 and lose 1, we're still up. Even though we've got a 50% chance of being right, we've still made money. So that's fine. Here we had a situation where price came in here and just continued down. Now by the time it actually entered, so I think we would have put it in around here, I believe. By the time it entered, no, I was just going to say by the time it entered, we may have cancelled it because the climate might have changed. But by the looks of it, by the time it entered, it would have still been a confirmed upwards climate. So we still would have taken that. So 1 losing trade, 1 winning trade, overall would have been profitable between the 2. That's what we like to see. So let's have a look at new opportunities. By the way, guys, I'm going to be using a scan to give us an idea of what opportunities to look at so that we don't need to look through each individual currency pair. If you have specific currency pairs and specific timeframes that you want me to take a look at, just put it in the chat box and I'll go do that. Otherwise, like I said, I'm going to be using the scanners because it makes, to me, makes a bit more sense to let technology tell me where I have probabilities and where I should be looking. But like I said, if you have specific currency pairs and timeframes you want me to look at, just put it in the chat box and I'll have a look. Okay, so let's start with swing trading. So that's going to appeal a little bit more to Nick here. Because the name of the session is swing shot, so we'll stick to that to start with, which means we're going to be sticking to our bigger time frames. If we don't find anything there, we'll move on to our shorter time frames, and then Khalid, you'll have something that makes a bit more sense for you. So first things first, we want to be looking at these yellow boxes. By the way, guys, let me know if you have been in these sessions before and you know this already. Let me know, and I'll skip past it a little bit quicker. If you haven't been in these sessions and this is completely new to you, just let me know again and I can expand on it if you need. So I'll start explaining it. I'll keep an eye on the chat box. If you're like, yeah, I already know that, I'll speed through. So with these scanners, essentially we are using a TradeStation scanner, obviously programmed with things that we want it to look for. And it comes back and it shows us with these yellow boxes, hey, these opportunities are near. That's what the yellow boxes tell us, near, which means you're close to an ideal entry point. So that's one thing. But you might notice some of them say near sensible. Some of them say near hopeful. Now, as traders, we don't want to be hopeful. We want to be sensible. We don't want to place trades where we are crossing our fingers and hoping. We want to be placing trades where we have probabilities. So we want to be sensible. So what we'll do is we'll eliminate all of the ones that say hopeful, which is all of this box, the bottom 3 of this box, the bottom 4 of this box, and none in the rest. Great. So that's left us with now 1, 2, 3, 4, 5, 6, 7, 8 opportunities to look at. But now there's one more thing to look at. You see on this bit where we have these boxes, it could be red, blue, or grey. We want to eliminate the grey ones. Why? Because red tells us we have probability down, confirmed probability down. Blue tells us we have confirmed probability up, and grey tells us we don't have confirmed probability either way. So we don't want to be looking at something that doesn't have a confirmed probability. It would kind of just be shooting in the wind and seeing what happens. So we're going to eliminate those as well. So that means that we're going to eliminate this top one. We're going to eliminate these two. Those two are fine, and that top one is fine. So that's now left with 1, 2, 3, 4, 5 opportunities to look at over these different timeframes. So hopefully that makes sense as to how we got there and why we got there. Essentially, again, we're just using technology to show us where we have probabilities. We then apply a little bit of logic to that, get rid of the ones that have less opportunities, and it leaves us with ones that have the most opportunities. That's not to say that all of these are trades we're going to place. There's still further things to the methodology we need to look at before we place a trade, but at least we're focusing our efforts in places where it makes sense. So again, I've seen some new people come into the room. So just to say to you guys, let us know comments, questions. It says there, thank you, admin, I have put that, put comments and questions in the chat box. Of course, if you have specific markets and timeframes you want me to look at, I can do that. Any questions, let me know. If I'm going too slow, let me know. If I'm going too fast, let me know. So I can make sure you get the best out of this. So as we are starting with swing trading, I'm going to look at the daily one first, which is this one, so euro pound. So we'll look at that first, then we'll move on to the 2 40-minute climates, then we'll move on to the 60-minute climate. Okay, so you might have noticed that as I came out of that freeze screen, we've had a couple of changes. Sometimes that happens. Of course, the markets are living, breathing things. They are moving. So we'll look at the daily one first, and then we'll go from there. So we've actually got 2 sensible opportunities, pound Swiss and then euro pound here. So let's go take a look at that. And then we've got euro dollar there from Khalid. Brilliant. We'll go and look at the euro dollar. Let me know, Khalid, what timeframes you want to use on that, so we can be more specific. So we'll start with these daily ones. So pound Swiss. Those timeframes are good. Pound Swiss. Great. So we had daily climates, and that's what we have here on our left. So you notice up here it says 1 day. So the left-hand side is showing us our daily. On the right-hand side, let me just move price a little bit here. On the right-hand side, we have a 55-minute chart. Now, why do we have a 55-minute chart? That might seem a little bit weird. It is weird, and it is weird for a reason. It's a Fibonacci number. Not always, but usually the Fibonacci timeframes tend to have higher probability than the usual ones. So from Khalid, I'm seeing a 60-minute. Just to let me know one more time, Khalid, is that 60-minute for your bigger timeframe? Just checking. So let me know on that. And once I've done this one, we'll go and have a look at that. So with this opportunity, first things first, we come over here and we use this bit, these dots. Ignore the lines for now. These dots tell us, great, thank you, Carla, just seen that. Thank you. I'll have a look at that in a second. So these dots tell us where we have probabilities, up, down, or nowhere. If it's thick red, which is what we see now, this dot here, then we have probability down. If it's thick blue, like one of those, we'd have probability up. If it's thin, of either color, then we don't have probability either way. So it's a really simple yes or no equation here. We're using, this is free, by the way, AutoClimate is a free app to help us with this. So if we know whether we have probability up, down, or nowhere, we know whether or not to buy, sell, or do nothing. That's got to be the first thing that we ever think about when we're trading. Should I be buying, selling, or doing nothing? In this case, we should be looking to sell because we have probability downwards. No point buying when we have probability down. So probability downwards, looking to sell. Great. First question answered. Next question is, okay, where do we sell? If price is got probability to the downside, we could just sell it where it is right now, but that's kind of subjective. That's selling in the middle of nowhere. It'd be hard to figure out where to put a stop, where you're objectively right or wrong. The probabilities might be lower. If we're going to sell, we need to answer the question, where are we going to do that? where in price do we have the best probabilities to line up with the probability down to help us out here. That's where these guys come in, our UFOs. If they are red UFOs, they show us, they're called UFOs, by the way, because it stands for unfilled order. I know it looks like a little flying saucer, but UFO stands for unfilled order. These show us where we have stacks of sell orders, if they're red, or stacks of buy orders, if they're green. Now, why is that helpful? It's helpful because if we are going to sell, we want to sell where there's lots of other selling, because it's much more likely to push through the buyers and push price down. If we were going to buy, we want to buy where there's lots of other buying. This is more likely to push through the sellers and push price up. It just adds to our probability to be able to buy and sell where there are other big stacks of buying and selling going on. So that's why we use this app to tell us and show us on the side here the prices. Where, between which prices do we have these stacks of sell orders? So we can be much more specific about where we sell. Now, one more element here, because you might be thinking, okay, well, there's a few UFOs. Which one do you pick? This is where we come back to our bigger time frame. We look at our EMA price. Now, we do that because people buy and sell at the EMA. It's a very common thing to do. EMAs, exponential moving averages. These are indicators that exist on pretty much every platform that most people are using, and they are using it for buying and selling entry points. So if we have sellers coming in because of the UFOs and sellers coming in at the EMA price, and those two places happen to overlap, then we have probability down, sellers and sellers. More probability that everything is working in our favor. That's why we line it up that way. So hopefully that makes sense. Now the EMA value at this point in time is 1.2690, which is round about here, which is nice and comfortably within this UFO. So brilliant. Let's take that UFO. That will be our entry UFO. So I'm just going to bring up the order panel here. I'm just going to use, I know it says fib retracement, and I know I'm not using this for what it was intended, but I use fib retracements here for a drawing tool. So just to make it really visually easy to see what we're looking at. So I'm going to double click on that, and that way I can just type in what the numbers are. Now, where do I get the numbers from? The UFOs tell me. These little red boxes tell me those numbers, where we have those stacks of sell orders. So our entry price is going to be this bottom one here, which is 1.26756. I'm just going to round that down to 1.2675. That's our entry. That's what we have here. Our stop loss is going to be using this top one. So this top number is 1.26983. The first things first, we're just going to round that up to the closest pip, which is 1.2699. Then we're going to add that 7 pips-ish of wiggle room. Again, you guys might have different rules as to what wiggle room you give it, but we're going to give it 7 pips. So that takes us to 1.2706. Now that's now created a little bit of a problem, because you might notice that that has fallen just within another UFO. Now, why is that a problem? It's a problem because we don't want to be getting out of a trade in the middle of more sell orders. Bearing in mind, if we're selling, then our stop loss is a buy order, which means we would be buying in amongst sellers. We could be stopped out just by a couple of pips and then see it go in our direction because we got out too early. So ideally, we want this line, our stop loss, to be above this stack of UFOs now. So what we're going to do is we're going to take this number, this top bit, which is 1.2744, round it up, 1.2745, add 7 pips is 1.2752. Now it makes a big zone, but it's still not that big, still less than 100 pips or so. But this will then come down to you guys as individual traders. Do you look at that and go, that's too big, that's too small, that's enough, that's not enough? That will depend on you and your rules. For me, I'm going to follow this through just to place the trade, and hopefully it makes sense. And again, you guys can decide whether or not it actually works for you depending on the size of the zone. So great, we've got our entry and stop, but where are we going to take our profits? If we're right, where are we going to get out? This is where we use, again, technology to help us. So first things first, we have 2 different targets. First one is really easy. So the entry, 75. Our stop loss is 52. Great. The great thing about TradingView, I've put in the entry and stop and it's come up and it's told me how many pips that is. My first target is the exact same amount of pips away. That's it. So if it's 77 pips of risk, then my first target is 77 pips of profit. Great. You might notice this number here is 1. It's a 1-to-1 trade. That's then told me, by the way, exactly what number that is, what price that is. I didn't need to work it out. So 1.2598. Let's put something on the chart again to make that easy to see. 1.2598. That's our first target. There we go, easy done. Now, what I'm going to say is that we're going to risk $50 per target, so $100 overall. And then let's just double check that everything's where it should be. So entry, stop loss, profit target is 1-to-1 away. Great, risking $50. Do that. By the way, the risk is up to you. I'm using $50 each to make $100 overall, just because it's a nice round number, easy to divide in half. You guys pick what makes more sense for you. So there you go, those orders have gone in. That's our first target. Now, where's our second target? Where are we going to try and get the most out of this? Now, this is where we come back to our UFOs. So I'm just going to squidge this out a little bit so we see this. So notice that we have green UFOs here. We use our green UFOs in this case to be our second target. Because if price is moving down, has probability downwards, the only thing that's going to stop that are buy orders. Buying, that's the only thing that's going to stop it from going down. So we need to use our bigger time frame, in this case it's a daily, buy orders to get out, or just before that. And you might be thinking, well, in which case you've got one right there, right on top of you. Now we don't take this one, and the reason for it, you might notice it's a different color. So this is like an olivey green, and this is like a deeper, more like proper green, if you know what I mean. I can't really describe the different greens, but they're slightly different colors. The color of the top one shows us that it's already been used, meaning it has less probability. So considering we have probability down, sell orders, EMA coming in at the same point as well, a lower probability buy order is not something we're overly worried about. So we're going to use this one, which is a higher probability buy order. See the number there is 1.2419. Just going to round that up by a couple of pips because we want to get out beforehand, and we're going to go to 1.2421. Just going to draw a little ray on there again. So 1.2421. I only draw them just so that it's really easy for you guys to see what we're doing. And then I'm just going to plug this in here. So same entry, 2675, same stop loss, 2752, it remembered it. And then on profit, I'm just going to type in 2421. See, that's now come up and told me how many pips away that is. Wrong one. Told me how many pips away that is, and then it's a 3.3 to 1. So overall, I've got a 1-to-1 and a 3.3 to 1. If both of these targets hit, it's an overall trade of 2 point something to 1. If just the first target hits, which is why we put it in, let's say price comes in, hits the first target, and then moves against us, we break even. Or it might be that price comes in and goes straight through. So those are the three possibilities we have there. We either get stopped out and we lose $100 in this example. And again, that could be 10, it could be 1, it could be 1,000, it could be whatever you want it to be. Or we break even. Or we make an overall 2.2 something to 1. Now there's trade management as well that you might add there that might change those things. But just going as basic as we can, those are the three options that we have, 3 things that could happen. So let's place the trade. There we go. So that was the first trade we've put on pound Swiss daily for our bigger time frame, 55 for the smaller time frame. We've got our entries from our UFOs, stop loss from our UFOs. First target is a 1-to-1 away, and second target came from the UFO as well. So that's start to finish methodology, placing the trade, everything. I know for those of you that join us in sessions regularly, you're like, yeah, great, I get it. I've seen that before. For those of you that might be completely new to trading as a whole, that might have been too quick and too overwhelming and you don't know what's going on. Either way, hopefully it made some sense as to how we got there. If you're completely new, don't worry. The more you watch stuff, the easier it is. If you're a veteran of this, then again, hopefully you're okay with the explanation as to how we got there. Any questions, let me know. Otherwise, Khalid, I'm going to come to your suggestion, which is to look at the euro US dollar. I'm going to show you what I mean by when we say about using the scanners, just because if we come to TradeStation, see on a 60-minute chart, our euro US dollar is not showing that it's sensible or that it's near. So we'll take a quick look, but that's why we use the scanners, so that we don't have to really worry about this. So you said 60-minute on the left hand side, which would be a 20, no, it would be an 8-minute here. Okay, so this is day trading, smaller time frames. This will mean that this trade, if we get in one, would happen probably in the space of a couple of hours. But just to explain again why we use the scanners, to show us what to look at, because if we look at the euro dollar, we have, yes, probability downwards, great. So we should be looking to sell. Again, we're using our free app, Auto Climate, there to help us out with that, looking to sell. We do not have UFOs close by, and the EMA is 1.2236, which is basically where price is right now. So you have a couple of options. If you are an just EMA buyer and seller, meaning you sell at the EMA price, well, pretty much now is the time to do it, because price is at the EMA price. So you could go in with a market order if that's your strategy. If your strategy is UFOs, then you don't have an opportunity to weigh up there. By that point, it won't line up with the EMA. So it depends how many variables you have in your methodology and how strict you are on it. If your methodology is just EMA, great, opportunity right now. If your methodology is just UFOs, not an opportunity for a little while, but you could just still take it whenever it gets there. If your methodology is UFOs and EMA have to combine, for the time being, there's nothing here lining up for that to happen. So like I said, nothing right or wrong. If you're an EMA trader, great, go do that. Nothing wrong with that. It clearly has its place. Lots of people do it. If you are a UFO trader, you're going to look at it differently. You might be somebody that trades based on support and resistance, or Fibonacci retracements, or I don't know, Ichimoku cloud. I think I always say that wrong. Elliott wave, whatever. Loads of different ways to do it. Based on the way we look at the markets, there's not something lining up. But if you have different rules, different variables, then you might just have that. So Khalid, I know we didn't go through and place a trade on this. It's because we didn't have our methodology lined up as we did. But hopefully that helped to explain why we do it that way, why we look at it that way, and what other opportunities might be available to you depending on your thought process. So let me know. Brilliant. Okay, good. So let's go back to our scanner and look for more opportunities. So we looked at our pound Swiss. We're now going to look at our euro pound. I know, Nick, you'd said that you look at longer term stuff. So let's look at our bigger time frames again, which is the next one down here. Near sensible. Blue box, lovely. Euro pound. Let's take a look. Okay. Euro pound. Euro pound. Now we come to our euro pound and see here, this is where the data is slightly different on TradeStation than it would be. We're using FXCM data here. Let's look. Let's see if we look at Oanda data. It may be slightly different. Oh no, it's the same. So obviously on TradeStation, it was telling us that we'd have probability upwards, but we have a thin dot here. It's I know it's blue, but it's thin, and that's what matters. If it's thin blue or thin red, it's not enough probabilities for us to call it, so we do nothing. We don't want to be placing trades if we don't have enough probability. So I know it's blue, but it's thin, not confirmed, not enough probabilities. We're going to keep away from that for the time being. We'll go back to the scanner. Okay, so nothing more on our daily climates available to us because these are all hopeful, so we don't want those. We may have a dollar Canadian short to look at here. So let's take a look at that. US dollar, Canadian dollar. Obviously, we have the majors on that scan. We have the majors on the left and the minors on the right. Let's take a look. 285. Okay, so we have a similar situation as we just had on the euro dollar. We have probability up, great, we should be looking to buy. We have very, very close, very close. We have a green UFO here and our EMA is 1.2085, which is literally just there between price and our UFO. Ideally, we want them lining up exactly. Now, I know you might say, come on, it's a couple of pips. But when you break the rules for a couple of pips, how far do you keep breaking that? Well, then it's a couple of pips away from that, or it's a couple of pips away from that. So ideally, we want our EMA just within that, not just outside of it. So unfortunately, no trade here. Now, what you might do, again, you could buy at the EMA, and it looks like that's created a reaction already. You know, price has moved up a little bit as a response to that, as a response to hitting the EMA, which is about here. So you could just buy at the EMA. You could wait until it comes down into this UFO and just use the UFO. Ideally, we want them to line up. It may be that as price falls a little bit, that price does line up and that EMA moves down. In fact, I would think it's a couple of pips. I'm not sure on that, so I'm not going to go and place a trade if I'm not sure. We want this to be objective. So again, you could keep an eye on this, set an alert for maybe just above here. You could go in at market, set an alert, see where the EMA is. If the EMA is within this UFO, great, follow the methodology, take the trade. If it's not, you have a choice. You can just do UFOs, just do EMA, do something else, or you can combine them. If you're combining them, if they're not lining up, don't take it. So hopefully that makes sense. I know we're playing with a couple of pips here, and that's why we don't take that trade. But again, there is a reason for that. We want to make sure that we're strict. If we break the rules for a couple of pips, then it could be chaos. You know, we could end up breaking the rules a lot. Notice here as well, the alert has gone from the dollar Canadian. So let's move down onto smaller timeframes again then and see whether we have opportunities here. So we're going to look at this top one, which is the Canadian yen 240-minute climate. So let's come back to our chart. Canadian yen 240. Canadian yen, this will be now a 21-minute. Those are just the timeframes that we use to match with each other. Now, just looking here. Yeah, looks like we'd have an opportunity. So let's have a look at this. So we have thick red dot, probability downwards, meaning we should be looking to sell. But we don't just sell anywhere. We want to sell where we have probabilities. We have probabilities at UFOs, and we have a couple of UFOs here. Now we have our EMA price at 90.14, which is just within this UFO. Now bear in mind, these two UFOs overlap each other, which means as price moves up, if the EMA moves up, it's still within, sorry, if it moves up like that, it's going to still be within a UFO. So let's use these two UFOs together, and these will be our entry prices. Oh, I'm going to right click there. Let me just double check. Brilliant. So notice as well, we have UFO down here. This is going to be the one that we are using to take. Now you may think, well, hold on, this one's an olive green one. You didn't take the olive green one before. That's because price was already within that olive green one. At the moment, price is not within that olive green one. Price is up here. So we'll take that. So any questions on that, let me know. I understand that I went through that quickly. So the prior example, price was within that UFO and it had lesser probability. With this one, yes, this has lesser probability than this one, but price isn't within it. We've still got decent room, so we'll still take that. So let's now get to our drawing tools. Draw things around here. We'll let that other way around, so that the black line is the entry and the red line is the stop. So move out of the way, please. There we go. Let's double click on this so we can get those numbers right. So the entry 90.08, that's coming from this number here, 90.08. Stop loss 90.216, round that up to 90.22, add 7 pips is 90.29. And that's our entry and our stop loss. There we go. Our first target is going to be 1-to-1 away. So let's just put this in, 90.08. As we can see, price is actually already moving into that UFO. So what we could do is do a market order with a stop loss. The same stop loss is 90.29. And the market order means we'll get in whatever the price is now. Now, at the moment, it's actually come out of that UFO a little bit. So let's see if it will take our limit order. So 90.08 is the entry. Our stop loss is 90.29. Our first target, 21 pips away, because it's the same. We're going to risk 50 bucks and we're going to press sell. So that's the first one that's gone in there. Let's just put our line there. So what's that? 89.87. That's the first target. Second target is going to be using this number, 89.155. I'm going to round that up a little bit to 89.18. Just again, so we get out before that. So you might have noticed that's just executed. We've just got triggered on this trade. Now let's place the second one if we can. So limit 90.08. Stop loss, same stop loss. Profit target is 89.18. And again, notice that's worked out for us the amount of pips, and it's a 4.29 to 1 trade. So if we hit both targets, then it would be a 1 to 1 plus a 4 something to 1. So overall, we're looking at a 2-3 to 1-ish trade. Okay, make sure that we're risking 50 bucks again, so our risk is consistent, and put that in. There we go. So we have, let's see if we can squidge this down and see it all. There we go. We have our entry based around our UFOs, our stop based around our UFOs. We sold because we have probability to the downside, and we see that with our auto climate. We have one target that's 1 to 1 away, easy maths, and we have another target which is based on the opposing UFO. So that's now 2 examples we've gone through start to finish of looking at, there you go, we've just been executed in these as well. So we're now in both of those trades. We've looked at 2 opportunities now on different time frames that have gone start to finish, looking at the scanner, going to the chart, seeing if we have opportunity or not. We've looked at some where it ends up that we don't have opportunity. That's okay. We don't want to trade for the sake of trading. We want to trade for the sake of probability. Do we have likelihood of price going in our favor or not? If we did have likelihood of price going in our favor, then we execute the trade based on those variables lining up and our methodology being met. Now, what you can do as well is come to the economic calendar here. I've looked for the next week. This is on FX Street. Obviously, you're already here, so you probably already know it. I've filtered by high impact news and obviously by the next week so that you can see. So let's say tomorrow you've got US dollar news coming out in the morning. This is Eastern time that we're looking at. On Sunday, Chinese news that may affect what's going on. On Monday, Euro news. And then on Tuesday, news on quite a lot of different currency pairs. Now, for the trades that we've put on, I think they're both, and we've got pound and, which one were we looking at? Is it Canadian yen? Can't click on it now because the things come up. But anyway, then yes, we were looking at, I need to move this. I'm not sure if you guys can see it, but when I put my mouse to the top, if I'm not careful, it just brings up the sharing thing and I can't click my tabs. But anyway, here we go. When we're looking at the FX Street calendar, look for the trades that we put on. So we put on a pound Aussie or a pound Swiss, it was pound Swiss and a Canadian yen. So you can be coming down and looking at this and going, okay, the next news coming up, we've got the Canadian and we've also got the Swiss there as well. So the next news that could come up that could change things because we've got high impact coming into the markets, high volatility coming into the markets, that's on Tuesday. So if I'm not out of my trades by Tuesday, I need to have a plan as to what to do. You could be somebody that embraces high volatility and you want to go and place more trades. You may be somebody that really does not like volatility, in which case you cancel your trades or you reduce them or you close out some of the position. You cancel them entirely. Ultimately, again, up to you, but you can use this calendar to give you the information for you to then interpret. So like I said, guys, hopefully that made sense what we went through. We've got 2 trades on. When we're next back together, which will be in a couple of weeks, we will have a look at what happened. Would we have won? Would we have lost? Would we have cancelled anything? Would we have changed anything? There's trade management techniques we can do. The one that I will leave you with before we wrap up the session is with auto climate. We got into this trade because the climate was down, because we had probability downwards. So let's say tomorrow we with a thick blue dot, which means probability upwards. In that case, one risk management technique you can use is close the trade, because you got into the trade for a reason, which means if that reason changes, get out of it. Hopefully that makes sense. So if that now changes, you may use that as a way to get out of your trade early. Now that might mean that you get out of the trade and then see it would have gone in your favor. It might mean that you get out of the trade and save yourself more of a loss. Ultimately up to you again how you do your risk management. For me, this is a technique I use. So if the auto climate changes from what it was when I got into the trade, I'll cancel what I'm in. Or if I'm not yet in it, I'll cancel the trade so it doesn't trigger. But again, ultimately up to you guys how strict you want to be. The more strict you are, the less trades you have. The less strict you are, the more trades you have. So pros and cons either way. Ultimately, we are all about putting probabilities on our side, using technology to help us be objective with that. So that is a wrap up for today. We put a couple of trades on, and when we come back next time, we'll have a look at what happened. Any last minute questions, anything that didn't make sense, just let me know in the chat box. Otherwise, you can go to tradewithufos.com/Becky, get yourself a free Trade with UFOs membership. Then any questions you have after the fact, you can then put in here. It's in public. It means I can answer in public and everybody else can see the answer. So we all help each other. So good luck in the markets, guys. Have a good trading day, good trading week, good trading couple of weeks before we meet each other again. I'll keep an eye out on the chat box if there's anything else, but otherwise, good luck and I'll see you next time. Thank you, Khalid. Thank you for participating as well. Hopefully it was helpful. And thank you, admin, as well, for helping out. And we'll see you guys next time.